So let me go through some parts of the promotions first before I hand the time over to our speaker from LionGlobal, right, Xun Xiang, who will share more about the presentation and the so-called the product that we are going to share today. It's a very interesting one, and I think all of you are interested. I also do know that we do have an exclusive for the physical audience promotion, which I will share. All right, and then that's the limited edition as well. Okay, so first one to share, right, for ETF trading on the Police platform, there's no minimum commission, regardless your cash plus, cash management, any account type, there's no minimum commission, but the commission percentage will still take your account type's commission rate. Okay, second, we do have ongoing share financing. So if anyone is using your portfolio to buy more shares, right now the financing rate is 3.6%. All right, for Sing dollars, 5.8% for US dollar, and 5.58% for Hong Kong dollar. So if you want to earn some positive carry, if your dividends yield is more than 3.6% for Sing dollars, or your investment is earning a better dividend or a better capital returns than 3.6% for the short term, you might actually use financing to increase your investment quantum while you're waiting for your cash flow to come in or to earn that positive carry from the extra dividend returns for yourself. Okay, so I'll leave this slide also for just a few seconds. You can join our Telegram for market updates and insights. We do share some news, all right, relevant to you. So today, the topic will be on the LionGlobal Short Duration Bond Fund. All right, so without further ado, I'll pass the time over to Xun Xiang later. All right, but do note this is the one, minimum 1,000, no commission for this application period between 8 to 22nd. So today open already, 8 to 22nd, right? The listing date, the date that this ETF will be listed is 29 September. Okay, do note that. But if you are linked to CDP for your trading account, there's a $10 fee to transfer from this application to CDP. All right, but not to worry. Why? Okay, if you actually apply, every 5K you apply, you will get $10. All right, cash credit, cap at 500. Meaning if you apply to hit the cap, you need to apply 250K, right, which is the size of one normal bond size. All right, and for those that are here physically, later, I will say again, I'll repeat, but for those that are, after you listen to what Xun Xiang has shared and you're interested to buy the ETF, physically here, the first 20 that sign the physical form to apply will get an extra $20 voucher for applying 10K. So 10K, you will get 20 from this promotion and 20 on the spot with my colleagues if you choose to make the decision to buy today. All right, first 20 only for the physical one. But then the cap, a lot, don't worry, still got time. Okay, but the physical one only first 20. But if you not have decided for today, you can decide later on, no worries. By before 22nd, you apply, every 5K, you get $10, right? Promotion. So let me pass the time over to Xun Xiang first, all right, for the.
Hey, thank.
The water is here.
Okay, I think this one is mine. Good evening, everyone. Thank you for joining us today on a Monday evening. And it's great to see such a huge crowd today. I'm Xun Xiang from LionGlobal Investors. Glad to be here with all of you tonight. And today I'm here to share with all of you about our LionGlobal Short Duration Bond Fund, but the ETF version of this bond fund. So this bond fund has been incepted since 1991. So it's been around bond since 1991 for 34 years. It has had a track record for 34 years, consistently has outperformed the benchmark significantly. over the past 34 years. So for a lot of the clients out there who are senior enough, you might have heard of this product, even from the other distributors. So in terms of this product, the yield, current yield as of 31st of July, it is at 3.18%. So if you compare it with T-bills, the latest 6-month T-bill yield, which is at around 1.44%, our current yield is more than double of the latest T-bill yield. And the upcoming T-bill, 6-month T-bill results are about to be out in the next few days, and we expect the 1.44% of the current T-bill yield to even fall further. So all these make this a superior product for a lot of people to park their idle cash in it, while still at the same time be able to preserve and the purchasing power. And for this specific product, in terms of this product, there are also two key things to take note. We are basically turning this into a listed share class, and we are the first in Singapore, the first manager in Singapore to be able to create this kind of listed share class of an existing fund. So this is the key thing where we are technically creating a listed share class and placing it and listing it on the SGX. And second thing is that this will be Singapore's first active bond ETF. So for some of you who might remember, we were actually also the first ETF issuer, which listed the first equities ETF in Singapore. So this will similarly be Singapore's first active bond ETF. So for some of you who might not know us, we are from LionGlobal Investors. We are from the investment management arm, basically, of OCBC Group. We've been around since 1986, so we are around 40 years old now, and today we manage around 75 billion Sing dollars of assets for our clients. And out of this 75 billion Sing dollars of assets, around 55 billion actually come from fixed income. So we are predominantly a fixed income house that has built our expertise since 1986. And we started our ETF business since 2017, around October 2017, which was around 8 years ago, where we first listed the Lion Phillip SREIT ETF. And since then, along the years, we have listed the other 7 ETFs. Last year alone, we listed 3 ETFs within 1 year. So this is actually our 9th ETF. And our ETFs also rank among the top 10 ETFs held by retail investors, especially our Singapore REIT ETF, which is the largest REIT ETF on the SGX, and also Hang Seng Tech ETF. And we zoom into the SRS investor segment, our ETFs also rank within the top 10. In terms of trading volume, last year, our ETFs also ranked within top 10. So specifically, my presentation, I'll break them into different parts. First part will cover why Sing dollar bonds now. So as I shared earlier, the latest T-bill yield is at 1.44%. But because of this is also why actually Sing dollar bonds, specifically Sing dollar short duration bonds, might stand to benefit, especially when we are about to uncover the upcoming investment climate within this space. So first thing, a lot of T-bills right now, including mine, are maturing. And we are also finding a new place to be able to park our money, especially with T-bill yields falling. Right now it's 1.44%. It could fall further to below 1.4% very soon. And at the same time, when interest rates are falling, all these actually require a new place to be able to park our excess cash into. So right now, the latest, based on the latest interest rates we see so far within the US, is at 4.5%. And in the next 2 weeks, we are expecting the US Federal Reserve to be able to be further cutting interest rates below that, at least 25 bips rate cut expected. So all these are expected to further reduce the upcoming yields of T-bills or a lot of other interest rate instruments. And when there are all these rate cuts or interest rate movements, sometimes all these cause and trigger a lot of volatility within the bond market. And in this kind of case, when we invest in bonds, usually we want to have more stability. So this is where actually short duration bonds come in, because duration basically means interest rate sensitivity. So when the duration is actually shorter, interest rate sensitivity is shorter. So this means whenever that rate movements, all these have lower impact and on the bond price fluctuations. And all these are important. If we translate into a bond fund, it means lower fluctuations and changes in the bond fund's prices. And third is also about stable currency, which is Sing dollar. So far this year, Sing dollar has significantly appreciated against the US dollar. And by holding Sing dollar, we are able to also reduce the currency fluctuations of the bond fund. So all these are important to help anchor stability in this falling rate environment. And there are a few key features I want to highlight about this LionGlobal short duration bond fund. Basically, 4 key features. Very, very simple for all of you to remember. You remember B, A, S, and T is one of our best funds. This LionGlobal short duration bond fund, today the total AUM is more than 1.7 billion Sing dollars. In the past 3 months, it has grown by 100 million Sing dollars in terms of AUM every single month. All these are because there's been falling interest rates expected, and a lot of investors, including institutional investors, are slowly sweeping a lot of their excess cash into instruments like bond funds to be able to earn higher income and also preserve their purchasing power. So we are seeing a lot of smart money inflows recently, and with more and more T-bills maturing and also interest rates falling, so all these actually could prove it to be an extremely good instrument to be able to park excess cash. So some examples in terms of this fund. First is about broader exposure. So we do not just include or invest into Singapore bonds. We also include and invest into bonds listed or issued outside Singapore. So this is important, so we capture a larger investment universe. Second is about active management. So this bond fund is managed by an investment manager who's actually one of our senior management. He's been in the industry for more than 25 years. So he's been managing this fund for more than 10 years already. So he has consistently been outperforming the benchmark. And third is about short duration, which I also shared earlier, that it's important to reduce the sensitivity to interest rate movements. So all these are important to be able to smoothen out volatility, especially when markets are more volatile. And the fourth is about focusing on total return. So we are able to first generate more stable income because we invest in previously issued high interest rate bonds. So a lot of the bonds, we bought them in the past few years when interest rates were high, and we hold them. So they are already able to generate good interest income. But at the same time, because of the lower volatility expected, we also generate potentially a range of price appreciation to add together to this income return to generate total return. And all these are all these are because we have an active risk management approach that have been in place for decades, where we use this framework to be able to establish investment process to be able to invest in and pick selected bonds, and after that consistently demonstrate discretionary management. So there are basically 3 types of risks we manage for this bond fund. The first is on currency risk. So you'll notice that in terms of the Sing dollar bonds, we invest in around 80 to 81% of Sing dollar bonds. We have around 18% in USD bonds. But a lot of the non-Sing dollar exposure, we actually hedge back into Sing dollar. So you will see that we actually have 99.7% in terms of Sing dollar exposure. So all these are important to help reduce currency fluctuation, especially when Sing dollar right now is a safe haven currency where a lot of investors right now around the world are actually flocking towards. The second risk we actually protect ourselves is actually on interest rate risk. So this is where actually we have a short duration in terms of to reduce our sensitivity to interest rates. So this is where actually we maintain a weighted average duration of 2.25 years. So this is important to be able to help us cushion the price movements triggered by interest rate changes. And third is on counterparty risk or default risk, where we actually cap the sub-investment grade exposure to less than 5%. So this is important because we still are able to retain some potential sweetener, but at the same time, most of it, more than 95% of it, we hold it in investment grade bonds. to be able to generate the weighted average credit rating of A minus, which is much higher than the BBB investment grade rating. And glad to share that actually this bond fund, since 2014, it has obtained dual approval from CPF board. So this bond fund, we are only one of the 19 share classes in Singapore to obtain this dual OA and SA approval. So for this bond fund to be able to get a CPF board approval, first we have to generate and also beat the benchmark for at least 3 years. But because we were incepted since 1991, so we already had a steady track record for a long time to be able to show this outperformance and also pass CPF board's criteria for the unlisted share class. And naturally that since we really were able to obtain this CPF IS approval back in 2014, the natural and highly likely that we might be able to get this kind of similar approval 3 years later once we build the track record for this active ETF. And around the whole of Singapore, there are more than 1,000 share classes. So we are one out of the 19 share classes in Singapore to obtain this CPF dual approval for both OA and SA. And just to share, our current yield, latest yield, weighted average yield is due to maturity is at around 3.18%. For OA is right now 2.5%. So it still stands higher than the OA risk-free rate. And in terms of comparing between a unit trust and an active ETF, this is the table on in terms of the details. I actually also have something. So for some of you, if you have brochures, in the middle of the brochure, you will notice there's an infographic we actually prepared. So we are actually the first ETF issuer to prepare this kind of infographic. This is the complicated version when we compare the difference between a unit trust and an ETF. The key difference is on liquidity and also management fees. So because an ETF can be real-time priced and also at the same time, you are able to buy and sell on exchange once it's listed. And next is about management fees, where it's more cost efficient. For people who prefer it in a more simplified manner, we actually use a travel experience to describe and also illustrate the difference between a unit trust and an ETF. So in terms of a unit trust and an ETF, both of them can coexist together. For unit trust, you can think of it like a normal, traditional travel agency. But it's still possible to be able to trade through distributors, and also at the same time, you still get to execute your orders once daily. But ETF version is a bit more like a Expedia or Agoda. You are able to see the real-time price changes, and also at the same time, you can do it DIY. So these are the ways we use to describe and also simplify the differences between the unit trust vehicle and the ETF vehicle. And in terms of the next part about why active ETF, so in terms of globally, it has been a rising investment trend. So from the flows from 2019 to 2024, we grew about 5 times in terms of our investment flows. And this year alone, it has taken around 30% in terms of all inflows into ETFs. So it's a rising investment trend globally. And it's because there are 3 key advantages. First is on liquidity, where active ETFs offer real-time pricing. Second is on cost efficiency, where the management fees are actually more friendly for ETFs. And third, compared to a passive index tracking ETF, active ETFs, they do not track a benchmark. So because of this, they are able to make more active and discretionary decisions. So for a normal passive index tracking ETF, you have to follow the fixed schedule of an index rebalancing. So sometimes it can be quarterly, sometimes it can be every 6 months. But for an active ETF, the manager has the discretion to rebalance the portfolio anytime they want. So because of this, especially when there are huge decisions, especially those when there are interest rate decisions by the like the upcoming FOMC meeting, we are able actually to tweak the portfolio and make active decisions in terms of certain anticipations before or even quickly after the FOMC meeting. We do not need to wait for index rebalances to tweak or make changes to the portfolio. So this is the key benefit of an actively managed ETF. And because of this, we decided to launch this ETF in an environment where T-bill yields are falling, and make this ETF the Singapore's first active bond ETF, and also at the same time create a listed share class by making an existing fund into an ETF. In terms of the fund, key figures to remember, there are 227 bonds inside. The latest yield is 3.18%. The latest weighted average duration is 2.25 years. And the weighted average credit rating is at A-, which is above our investment grade. Most of the exposure is actually in Singapore, where you will notice it's a safe haven country. And for all the other exposure, which is all this around here to different countries, all these other exposure are below 8%, based on what you can notice. In terms of exposure to the financial and real estate sector is born in 60% majority, because a lot of these issuers within these sectors actually issue bonds. And there are two key deep dives I can cover about this bond fund. In terms of first is on the ANZ Sing Dollar bond, where we were able to secure it back then at annual coupon above 3.7%. So this was where actually we first captured and also invested in the portfolio during the periods where actually interest rates were still high. So we were able to capture this rate at above 3.7%. And this bond, in terms of the yield, is at A-. So for a normal investor to be able to build this kind of portfolio, because we have around 227 bonds. In Singapore, to buy a bond, minimum investment is 250,000. So to be able to build a 227 bond portfolio, you at least need around 50 to 60 million. But through a bond fund, we make it so simple. You gain access to a portfolio with 227 bonds. While at the same time, you also don't need to worry about allotment, because for a normal bond, even if you have the money, you might not be able to get the preferential allotment. But for an institution like us, we have been incepted since 1986. We are a cornerstone investor within the Singapore fixed income space. We do have relationships and also preferential allotments across the different relationships. So all these help us be able to gain institutional access to different types of bonds, which are not so easy for non-institutional investors to be able to access. And the second, in terms of the deep dive I'll cover, is about LG Energy Solution. For this USD bond, we managed to get it at a yield above 5.7%. And the credit rating, we also managed to get it at around A- for this bond. And for this issuer, the key thing is that they are actually very ambitious in terms of growing their future business, to the fact that they are actually one of the global leaders in producing EV batteries. So they really contributed a lot of ambitions to be able to build joint battery ventures. And there are also a lot more guarantees they promise in terms, for example, for another partnership with another company or strategic venture, they managed to be able to create a lot more certainty to be able to grow their business significantly. And since inception in 1991, we have cumulatively outperformed the benchmark. The benchmark is 3-month SORA plus 0.35%. So this year, for the past 1 year, we have already achieved 5.4% in terms of return. So we have been very experienced within this field, and also at the same time, in anticipation of interest rate changes, we have been tweaking our portfolio. And if we compare the yield against the many other instruments that are available to be able to gain interest income, the short duration bond fund actually stands well compared to many other instruments. So for example, for fixed deposit, in 31 July, we saw it at 2.45%. Actually, as of 31 August, it's the best fixed D yield is at actually 1.45% when I last checked, and it's actually with Bank of China. So the fixed deposit yield has decreased and fallen significantly. And in terms of the different MAS or even Singapore T-bill kind of instruments, if we look at the latest 6-month T-bill, is at already 1.44%. So interest rates have already fallen across the board. So right now we are still able to offer at above 3% in terms of return. So all these are ways where actually investors are able to potentially park excess cash into in a falling rate environment. And if we compare it with another ETF, for example, the Nikko Sing Dollar Investment Grade Corporate Bond ETF, it has similar weighted average credit rating like ours, but at the same time, it actually has longer duration. So because of this, the interest rate changes cause greater changes within the bond portfolio's NAV. So all these are able to actually illustrate that we actually are able to, through our previous historical performance, offer a slower volatility, but at the same time, in terms of latest yield, we are still higher than a longer duration kind of bond ETF. And the next thing is also we are actively managed compared to the other ETF, which is less actively managed because they are passively managed. So they have to follow a index rebalance schedule, but ours is active. We are more discretionary. We are able to make tweaks and changes and adjustments to our portfolio. So if you notice for the past 6 years, we have been paying out a steady distribution. All these actually we have been paying out purely out of the coupon income we have received from the respective bonds, 100% out of coupon income. So it's actually a very amazing track record. Not many other bond funds are able to reach this and pay purely out of income for the past 6 years. And if we even look at historical performance for the past 14 years, we have delivered 13 positive years in the past 14 years. And the only negative year is actually on 2022, where every single bond fund was hit. And it was because this was the year where the US Federal Reserve hiked and significantly interest rates consecutively across numerous FOMC meetings. So because of this, increased interest rates actually led to decrease in bond prices. And this was where actually there were negative capital returns for bond funds across the board, including ours. But you will notice that actually in 2023, we were able to make back the 4% we lost. In 2023, we made more than 4.2%. And in 2024, we were increasing the return back to 4.6%. So all these actually demonstrate the importance of actually short duration, where we reduce the sensitivity to interest rates. So because of this, whenever there are interest rate changes, the volatility of the entire bonds portfolio is actually also lowered. So all these allow a more steady kind of return for investors. So this is where actually I will have my first prize giveaway question. So our bond fund will be available as an ETF soon. So first question, this time I start with people from the back. So to make sure they are, and ensure they are listening. Yeah, ensure they are listening. Very, very simple question. So first question is, what is the Sing Dollar SGX ticker for this bond ETF? Yeah, wow, this one is really at the maximum back. Yes, SBO. Thank you. So for a lot of guys who attended national service, SBO stands for Standard Battle Order. So this bond ETF is meant to be the standard battle order for you to fight against falling interest rates. So second question, also quite simple question. What is the USD ticker for this bond ETF? This time I go to the middle. Yes, SBV. Very easy to remember, SBO and SBV. So I also have a few more questions, this time maybe from the front. What is the distribution frequency for this upcoming bond ETF? How many times will we pay distributions? Yes. So we will pay distributions every quarter. So we will announce it at the end of every single calendar quarter. So this ETF, because we will be listed on the 29th of September, our first distribution we will announce by the end of this year. So fourth question, also very simple question. How many, this time maybe from this side, how many trading counters will we have for this bond ETF? What is the sign for big three? Yeah, okay, see that. So it's two. Two for the two trading counters are Sing dollar and US dollar, SBO and SBB. Yep. So all these price giveaway questions basically nicely summarize this ETF. So this ETF is Singapore's first active bond ETF. Right now, it is the initial offer period, 8 to 23 Sep, where you get first-hand opportunity to buy the units of an ETF that has had steady track record for the past 34 years. And at the same time, after 29 Sep, you'll be listed on the SGX. Trading tickers will be SBO and SBV. Management fees is actually half of the current unlisted share class. We'll make quarterly distributions at the end of every calendar quarter. And right now, if you were to be able to buy this ETF, we have a special and exclusive promotion with Phillip Securities. So for every 5,000 invested, you will get a $10 cash credit, up to a maximum of $500. So this means a maximum, if you invest a maximum of 250,000, you get $500 in terms of cash credit. So I also pass over time to Huanzi, who will be carrying and also discussing more about the other promotions that might happen.
All right, thanks Xun Xiang for the sharing. So for those that are interested now on how to apply for the ETF, I'll be sharing on that. Okay, give me a moment while I just change the slides. Give me a moment. Okay, so for the platform, right? So you can see over here, if you go to our homepage, over here, the first one is the banner for this class ETF. If you click in to this find out more, you will be on this page. Scroll down, they'll remind you on the promotion that you're currently having. You can invest now, you'll direct you to the link inside. All right, okay. So how to get, you click in here, then you log into your account. Then you, of course, must put in your token. Give me a moment. I also need a token because I also subject to the 2FA. Okay. Okay, so after you log in, under account management, you see account management here, under online forms, you will see there is this IPO subscription, online irrevocable form. You click on it, right? You will see this particular form here, click on it, blue color already, click on apply. Then you come here, key in the amount you want, right? It is not in multiple of 1,000 already. You must key in. So you're 1,000, 2,000, 3,000. That's the thing. But this is for application. After you see it listed, you can buy. There is no minimum quantity. 1 share, 2 share also can. Okay. So for application, LP is different. LP for the online application period, there's the difference. For my account type is linked to CDP. So you see there's this transfer fee because after I apply, you'll be transferred to my CDP. If you're holding a cash plus or a margin account, there will be no exchange, no transfer fee. So don't need to, there's no additional cost, zero commission. Okay. So you see commission is actually flat here, it's zero, empty. This $10 is a transfer fee itself, not the commission. Okay. If you're holding a cash trading account that is linked to gyro, you cannot apply. Okay, so if you wish to still apply for this ILP, you can still, in time, to open a cash management if you want to transfer CDP, or open a cash plus account to apply for this ETF. Okay, after you apply already, the amount that you want, click on this, tick here again. Okay, So let's say I apply 1,000 here for illustration. Then you key your password to confirm. Okay, you press submit here. Yeah, this thing blocking. Okay, application successful. All right, the total amount payable, they will inform you. You must ensure there is sufficient funds in the account on 22nd. So to be safe, 22nd is a Monday. To be safe, I'll recommend you transfer by 19. If you're doing pay now, 22nd can, but you must ensure you don't pay now wrongly. If not, you will not see on the 22nd day itself, you will not go through your application. You can always fund in earlier. We got the money market fund to help you earn some returns first. Okay? You see there's a application status. Okay, over here you will see what is the amount. So 1,000 I applied. If you still wish to change along the way, now it's still early, 8th of September, and on 22nd. If later on you say, I got additional funds set, can apply more to get the promotion or to apply for more for myself. You can click on it, can amend or withdraw. Okay, mainly amend, don't really withdraw. We think we always good for everybody. Okay, so you can just see how you wish to apply like that. Okay, so I may go to this slide to just recap for you. Give me a moment. Yeah. So you see, step 1, account management. Step 2, choose stocks, ensure. Step 3, online form. Step 4 is the IPO subscription. All right. Click already. They will actually ask you for this sometimes. Some of you that have not logged in for some time, they will ask you whether your information is correct. If your information is correct, there's no need to do. Don't need to press update. Press skip. Unless you really change your particulars. If not, you can press skip, confirm that you skip the particulars because you can always update later. And then it will bring you to this page already. Okay? Then you click on the fund itself. You'll be highlighted in blue. And then you click on apply. Okay? So same thing. After you choose the amount, you then must choose the 2 ticks for the term and condition and key your password for number 3. Okay? Then after you apply, you'll be like this, green color tick. So you see this means that your application, if you don't see the green tick, means that your application never finished. You go to the confirmation page, but you never finish, never click, never go through. If you're not sure, you can always visit a branch that is near you to find help from any of our colleagues, or even today at the So this is view application status. You will then see it like that. This is the status. All right. Okay. Okay, so now we'll move over to Q&A. Any questions? Yes.
Is there any option to reinvest it?
Any option to reinvest dividend?
Currently, there's no option to reinvest the dividend. So once you receive the dividend, actually you can choose to just buy in the secondary market to reinvest. Yeah.
Okay, so at this point of time, I will also make advertisement. If you know of this thing called share builder plan, if after we onboard this ETF, you can then choose share builder plan for this ETF. We'll reinvest based on this on your selected counter. So you don't have to invest yourself. So our share builder plan process will reinvest the dividends on your selected counter. But the dividends, we only invest into one selected counter. So let's say you hold multiple shares, you only choose one to reinvest into. But at least it helps you to do it. Don't have to do manually. Right? Any other questions? Yes.
Can you use SRS?
SRS, you can trade after listed. For application, IOP, don't have. Only cash. But after listed, SRS, no problem. But remember to choose Singapore settlement. Don't choose later wrong currency, cannot go through. SRS can only deduct Sing dollars. Okay, any other questions?
What's the commission after launch?
Commission after launch. Commission will follow your account type. So your cash plus, cash management, stock trading, the rate that you are facing for stock trading, same rate. But ETF, no minimum commission. So even if you are the cash management that got normally minimum commission $25 or whatever, don't have. There are no minimum commission. Just purely your percentage basis. Okay,
So it's actually better to subscribe during IOP because you still get to take advantage of the cash incentives which we are offering. Because after IOP, we might not be offering such incentives so regularly.
Correct. And also no commission for the IOP period. So directly you save already. Yes.
You use CPF OA to buy after you launch?
For CPF OA is only for the unlisted share class, which is Class A bracket distribution for our unlisted fund.
Not this ETF.
Yeah, for this ETF is only cash during IOP. Then after listing is cash and SRS. Then for unlisted class you can use CPF.
Yeah, because CPF needs 3 years of track record. So even though they are the same fund, the ETF is newly listed in the eyes of CPF. So eventually it will normally be approved, but not yet. Not yet. Any questions? Yes.
These factors are
Okay, so what's the risk factors?
Key risk factors, I would say 3 key ones, which we actually already can go back to the slide. Really have it. Yeah.
Wait, I'll
Yeah, you full screen.
Give me a moment.
These will be the 3 key risk factors. First is, I would say, on interest rate risk. Because whenever there are interest rate changes, all these cause and trigger changes within the underlying bond prices. So we manage this interest rate risk by keeping the duration of the entire bonds portfolio short. When I talk about short, we keep it at around 2.2 years. So because of this, the interest rate sensitivity is actually kept very low. And because of this, the underlying bonds and together with their portfolios, overall volatility is also reduced. So all these are how we manage interest rate risk. The second risk we manage is on currency risk. So you will see that we invest 81% in Sing dollar denominated bonds. There's actually 18% in terms of USD exposure. But we also are able to manage this currency risk and hedge it using FX forwards, the portfolio level. So that's why able to achieve 99.7% in terms of Sing dollar exposure. So all these are important, especially, and because we are actively managed, we are able to adjust this SGD exposure if we want to. But right now, we believe Sing dollar is a stable currency, stable safe haven currency. So that's why we optimize the Sing dollar exposure and hedge it at 99.7%. Yeah. So expected return on the quarterly basis, basically in terms of quarterly, what we do is we give quarterly distribution. And a lot of it is based on the previously issued bonds, which we were able to buy, especially in the past 2 years when interest rates were high. So right now, a lot of the bonds which we bought, a lot of the rates we were able to actually acquire them at above 2.5%. But I cannot guarantee that we will continuously pay at least 2.5% per annum in terms of our quarterly income. But based on what we have seen so far, in terms of the total portfolio exposure, in terms of all the yields of the bonds the coupon yields we have acquired, this so far has been the yield which we have been able to access. And that's why also right now, in terms of the weighted average yield to maturity, we are able to, based on the relevant calculations, still able to give 3.18% as of 31 of July. Okay, I think you maybe to round it off, maybe around 3. Yeah, around 3.
Yeah. This was the offer to currency investment, one Sing and one US.
Yeah.
Given that the Sing is a dominant currency, if we invest in the US dollar, does it mean that the US dollar fund will be higher risk than Sing dollar fund?
You're talking about the USD trading counter, right? Specifically. So I think in terms of the USD trading counter, okay, first, if you invest in the USD trading counter comparatively compared to holding Sing dollars, in terms of currency risk, it will be higher because the funds-based currency is in Sing dollar. So if you ask me if I hold both Sing dollar and US dollar, personally, I will invest in the Sing dollar one. Yeah.
Okay, so I do see some people maybe need to leave, right? So Before I continue the Q&A, right? So if you want to apply on the spot, do actually visit one of my colleagues in the middle area. They do have a physical form. You can apply now if you want, right, for the incentive. All right. So we'll continue. There's one question from online asking the performance difference between the ETF and the fund. Is there any return difference that we will expect?
I think in terms of the difference, if we assume the same inception period, assuming you buy, let's say, the fund and the ETF at, for example, 29th of September, because 29th September is when the ETF is listed. If you buy around these two periods, the performance difference is expected to be minimal. There are some price differences expected. First is due to the difference in management fees. Second is also due to certain costs, because SGX related listing expenses, all these they are also borne by the fund. But these are like minor differences over the longer term if we've spread out. So they are not expected to be big. But at the same time, if you buy the ETF version, you gain access to liquidity because you are able to buy, sell on the exchange, compared to through a traditional channel where you can only subscribe or redeem once daily. But through an ETF, you can buy, sell on the exchange through real-time pricing.
So that corresponds to the next question, which is the total expense ratio of the ETF versus the fund A.
For existing Class A, in terms of the total expense ratio is currently at, because the Class A, for Class A, the management fee is 0.5%, so the total expense ratio is above 0.5%. For our ETF, the management fee is 0.25%. So the total expense ratio, very likely, we estimate will be slightly above 0.3%. So actually, for investors, it's actually a more cost-efficient avenue to be able to explore the ETF option.
Okay, so the question asking what's the minimum investment amount for the IOP period is 1,000. All right. But of course, if you apply 5,000, you then get the incentive through POEMS for the $10. Okay. But after it is listed, the minimum investment amount, or not amount, but rather share number of the units is one unit. So of course, your commission have to be part of play. Don't later buy one unit and your commission very high. But there's no minimum commission on POEMS. Other platform I cannot guarantee. So you just check your commission first before you trade. Okay. So next question is, can I assume the quarterly payout ratio? This I think you answered, right? So just skip.
The quarterly, I think you can assume based on at least in the next few quarters, it will be around 3% per annum, not 3.8. 3.8 is near SA rate. I don't want to guarantee that.
Okay, so 3 plus. 3 plus.
3 plus.
Okay, so the portfolio shows over 40% in Singapore bonds. Are these Singapore bonds the corporate bonds?
Okay, it's a mix of Singapore corporate bonds together with sovereigns, because we also have exposure to Sing government bonds. So it's a combination together with sovereign, so Sing government bonds, because some of the Sing government bonds, specifically some T-bills or MAS bills, only institutions are able to gain exposure to.
Okay, so I mean answer this one first. You can track the price after listed on 29 September onwards on the exchange. There is no management fee as per the unit trust version for buying or selling, but there will be the commission and exchange fees applicable. But if you buy the Class A version, the unit trust version, there might be front loading fee or exit fee depending on your channel of purchase or sale. Okay, and that one, there's only one price per day. There's no trading price per se. IOP is initial offering period, which is currently the period that we're offering from between 8 September to 22nd September. All right. Okay, if you have money in the account, can you apply? Yes, you can directly use the money in the account. There's no need to separately deposit if you already have funds in the account idle to apply. Of course, application of the ETF will be done on the account type that you have that have the funds. If you have multiple accounts, just ensure that the account that apply is the one holding the funds by 22nd. All right, so must be in the account by 22nd. Okay. Yes, it will be automatically deducted. Yes, this one.
Okay, you can buy through OCBC ATM, but through POEMS is the only platform. Is one of the you will be able to get the incentive For every 5K you invest, you get $10. OCBC ATM do not have discount incentive, first. Second, if you are one of the first 20 investors who subscribe more than 10,000 each today, you also get a $20 fair price voucher. So $20 incentive from poems and $20 fair price voucher. If you subscribe, you're one of the first 20 who subscribe.
Okay. So, I mean, yes, one question.
Would there be balloting? There won't be balloting. It's 100% allotment. This is not like Astral Bond where you subscribe, you might not be able to get. This one is 100% allotment.
Okay.
Yeah.
A very basic question. How is the valuation determined? Is that mark to market?
Yes, it's mark to market.
And when we mark to market, we mark to market for the interest rate.
Yes, we'll mark to market. Yes.
The fund manager will mark to market the NAV at the end of the day. During the trading itself, usually the market makers or the liquidity provider will then put the range of price there for you. So of course there'll be a bid and ask spread lah. As per buying and selling shares, there's a bid ask spread lah. But you can see an indicative NAV by the spread that they push on to. But the final NAV is normally only on the fund manager website at the end of the day. On their ETF Class website. Don't go to the wrong one. There's a unit trust and ETF Class.
Yes, there's the ETF Class website. We will upload the NAV. It will be published on our webpage every day before 8:30 a.m. So let's say on 30th of September, 8:30 a.m., you will see the first trading day's NAV, which is end of day of 29 Sep.
Yeah. Yes, sir.
The dividend is paid out quarterly, right?
Yes.
Which NAV? Is that excluding dividend?
Once it's paid out, we will deduct it during the ex-dividend date.
NAV here, over 1 year, 5 years.
Yeah.
All this is
all these will exclude dividends.
Correct.
Yes.
you mentioned just now the dividends is 100% payout once.
For the past 6 years.
Mandate or discretion?
We are able to do it discretionary. Yeah, it's discretionary, not part of the prospectus.
Discretion is
since 2017, we have purely been paying out of coupon income. So we do not expect to stop this track record. Yeah.
What's the performance?
It'll be this. Yeah, it'll be this one, no? The weighted average.
Not fixed.
Yeah, not fixed. But because we really hold the bonds, unless we sell the bonds, which we are highly unlikely to sell the bonds, we will just.
Yes, same.
Most of it will be at least next 2 to 3 years. We will be able to hold the bond and keep earning the coupon rate. Yeah.
This is a short-term bond fund, so you don't expect next 5-10 years type of stability. So you must match the expectations.
Actually, the price movement is not expected to be big because it's a short duration bond fund. So the price movement is not expected to be big. It's more of a tool to be able to collect coupon income and quarterly income.
The duration for us,
I cannot say I'll guarantee or within the next 2-3 years we should sell, but the weighted average duration is 2 years. So it means the whatever rate or the in terms of the yield to maturity we have, is around 2 years, 2.2 years, based on what we see so far.
sell from the stock exchange.
Yeah, you can. It's the ETF, you can sell anytime. Yeah.
Correct. So you will be subject to the commission for sell, right?
Yeah. Oh yeah.
Okay, I've been investing in the fund for 2 years. So far, so good. Okay, I understand that 2 years ago, the exposure to China was slightly more than 15% country allocation. So now I understand you'll be paring down your China exposure to now less than 4%. So is there a problem with China? So the Chinese bonds that you're holding now, I understand you're holding the maturity, right? So is there issue with China that you might be worried about? Because why the exposure down to 4% from 15% 2 years ago?
Actually, for this actually illustrates the benefits of active management, where we can actually tweak the percentage of certain countries or certain exposure compared to many other index tracking funds. So right now, because we are a lot, as long as we see that the credit rating or in terms of the counterparty risk becomes excessively high, we will be able to sell down the bonds and reinvest into better quality insurances. So this is where actually, for example, between the period 2022 when there were a lot of bonds that suffered from these interest rate decisions due to consecutive rate hikes. We were able to quickly make the switch to different types of bonds and illustrates the benefits of active management. In terms of China exposure, China bond exposure, for at least the short term, we do not expect more investments within Chinese bonds because right now, Singapore bonds, they actually pay much better. So very much in the next short to medium term, most of the investments would be towards Sing dollar bonds or Singapore or bonds by Singapore corporates. Yeah.
Okay, one more. You understand that the manager has a mandate to go into non-investment grade as mandate. So can you be more specific on this mandate? Say, for example, because it's short duration fund, right? I assume the fund manager will be quite tempted to go into non-IG because it's short duration. So,
but we have a maximum cap of 5% for
5%.
So and right now because it's a short duration bond,
Exactly.
we do not. Our aim is not to win suddenly produce like a 4, 5 or 6% kind of return. Our aim is to produce stable and consistent return. And this is also why we were able to consistently outperform benchmark for the past 34 years.
Right. Thank you.
It's supposed to be a safe and stable, more stable instrument. It's not the like the iShares kind where you can Asia high yield, you can return 6% and above. Is for a different risk profile.
Thank you.
Yeah. Yeah. Thanks.
Okay, so we do have some online questions. Continue first, to cater to those questions first, All right, so I think there are some that I think already answered. SRS already mentioned. Okay, let me see. Buying online, for those that are joining us through Zoom, will not qualify for the NTUC, but every 5,000, the $10, you will qualify. So don't worry. Okay, buying through OCBC ATM, I don't know the cost, but over here, if your account is linked to CDP, then there will be the $10 transfer fee. If it's not linked to CDP, there is no transfer fee, right? It is zero commission, zero transfer fee for margin or cash plus account types. Right? Only if it's linked to CDP, the cash management account, only the account type will have the transfer fee applicable. Okay? All right. And one question, what is the duration of 2.25 years mean to investor? What should they interpret the information?
So in terms of how you should interpret 2.25 years, I mean, first, for the duration, it refers to the interest rate sensitivity. Second, okay. So for the definition of duration, first is in terms of the sensitivity of interest rate. Second is more on, let's say, because for the 3.18%, it means actually theoretically, if you hold for 2.25 years, you will still be able to consistently earn 3.18% worth of coupons per annum for the next 2.25 years. This is the theoretical definition. But I mean, the truth is in real life, there will be a lot of interest rate movement. Sometimes it can be caused by big movements and all these can impact the underlying bond price. So this 3.18% should be seen more as a reference point than the return you can expect to get. But with that said, duration is short, interest rate sensitivity is actually a lot lower compared to the longer duration kind of bond funds. After 2.25 years, the interest rate will be, the yield to maturity will be a bit different.
So now is 2.25. You don't have to wait for 2.25 years later. Every month, they will update on their fact sheet. What is the new duration? What is the new rate expectation? It's always updated. Don't worry. It's not that you have totally no visual. 2.25 years later, then I know. No. You will be updated along the way.
Sing $1 per unit. Yeah. Yes, iFAST is also a participating dealer. Yeah, same thing. But I think for POEMs, in terms of the incentive, their incentive is actually better. $10 for every 5K. It's the same product. Yeah.
Yep. Any other questions from the floor? You know, I look at the online. There's a lot of online questions also. Give me a moment. Verify tenor tenor wise,
Oh yeah, I think in terms of the duration, we are muted, I think.
Sorry?
We are muted.
No, our mic is behind.
Or is that mic? Okay. So I think in terms of the duration breakdown specifically, it's quite evenly, although we are, okay, in terms of the bond fund, it's a short duration bond fund. But we do have bonds that are longer duration because we want to lock in the better interest rates. So basically, it's quite evenly split. In terms of duration of 1 to 3 years, we have around 30+%. Duration of 3 to 5 years, we have also around 30 plus to around 30+%. And
Hi, good evening, everyone. Welcome to today's session of live counter review using technical analysis. Apologies for a slight delay as there was another webinar that was going on prior to this. Okay, so first off, to start off with, I will go through the US economic calendar. Then afterwards, I will talk about the indices and commodities, followed by some of the other sectors like the Mag 7, financials, semicons, as well as EVs. Then last but not least, I'll also talk about the counters that you all have in the Q&A. So yeah, if you have any questions, you can feel free to just drop them in the Q&A. So first up, in terms of economic calendar tonight, nothing much ongoing except some bill auctions. Tomorrow there's a small business optimism at 6 p.m. rate book 8:55 p.m. Something important tomorrow will be the market will be looking out for this payrolls benchmark. So it will be the revision to the payrolls. So that will be out at 10 p.m. Something important to take note. Okay, afterwards, Wednesday, API crude oil stock 4:30 a.m. PPI. Wednesday we have PPI at 8:30 p.m. Okay. The usual core inventories data at 10:30 p.m. Then afterwards, Thursday there's the OPEC monthly report 7 p.m. Usual jobless claims 8:30 p.m. CPI data on Thursday that will be important at 8:30 p.m. Okay, then Friday bond auction, Michigan inflation of consumer expectations 10 p.m. Yeah, so I think the most important one will be the payrolls revision tomorrow 10 p.m. Then CPI Thursday 8:30 p.m. So that will be the most important events for the week. Okay, next up, I'll go talk about some of the indices. First up will be on Bitcoin. So I think Bitcoin for now, there's still a bit of I would say still some weakness as price has remained below this, continue to face resistance at around 112, 113K level. So this was the previous support. Now it's starting to acting as a bit of resistance, and price is just doing a bit of a sideways over here. In terms of the weekly, yeah, price there was a bit price pullback towards the weekly 20 MA level, this yellow line, around 108K, then doing some rebound, but it's still below this blue line, the 5 MA 112.4 around there, 112.4K. So there will be probably be some short-term resistance still, and probably still see some weakness. I think we most probably will see some sideways price action for now first. Yeah. Unless price can get a break above 113.5K, then it could do a further rebound towards the next level of resistance, which is this 117K. Yeah, so that's for Bitcoin. I think we'll probably see some sideways first. Then next up is Dow Jones. So next up, Dow Jones. I think it's still quite strong. So what it's doing now is pretty much just a sideways consolidation. So 45K previous resistance is still holding as support. Then price is just trading sideways lah. So I think that's still okay. For now, support will probably be around 44.7K to 45.2K. Then current resistance around 45.7K. Okay, I think most probably we could see some further sideways first, but then if price can manage to break above this 45.7, we'll probably extend the uptrend. Next level of resistance, maybe if it does, we do have a breakout, maybe 46.4K. We will take the height of this range up, it's around 700 points. And we project it on top of 44.7, then we can get 46.4K. That might be the next target level. Yeah, for now, it's still okay as price is just still holding 45K above previous resistance. And next one for Nasdaq, I think we're seeing a bit of a sideways, but I think it's still okay. Pretty much the dips have been finding support along this upward support line over here, as well as I think the 30 MA level. So I think overall for now it's just a bit of a sideways. And last Friday, gap up to at this swing high, there was a bit of a pull, a bit of a selling from the open, but price still managed to find support from when the intraday lows actually retested near 21.5K, which is this 5, 10, 20 MA level. So I think here will be the short-term support level. And if here can hold as support, that will be quite strong for price to move higher. And so for now, maybe some sideways action first. If price can hold 21.5K, this moving averages level, then I think will be quite good for price to move higher. Yeah, then above 21.9K, I think next level is maybe 22K about there. Yeah, so that's for Nasdaq. Yeah, still holding pretty well, just a bit sideways overall. For S&P also pretty much around the same. So price is still finding support at the rising wedge trend line area, as well as the 30 MA level, which has been holding the dips whenever there's some dips along the way. And last Friday open at a new high as well, and some slight pullback. But price is finding support at the moving averages as well as this trendline support around 6,450. So I think that's still pretty good. As long as price still holds above 6,400, I think we should be able to still see this uptrend continue. And then next level of resistance, I think it's probably around 6,600 will probably be the next key level. Yeah, so for indices, they are all still trending okay. Next up for gold, is last week had a significant moment. So finally, after the many months of consolidation, we finally see a breakout in terms of gold. So I think I will expect in terms of the target move, I think the projected move may be towards 3,770 area about there. So this is taking the height of this consolidation wedge projected onto the breakout point at close to 3,400. So I think we're probably around halfway over there. So for now, I think we should see price continue to find support along this 5 MA level, this blue line over here for now. Yeah, as it continues the strong momentum since the fresh breakout. Yeah, so that's for gold, fresh breakout and expected to trade higher. And then next one is oil. Yeah, for oil for now, I think just probably sideways. So price is finding resistance above 65, then some support from a retest around 62 last Friday. So I think we probably see just some sideways movement for now with resistance 64 to 65 about there. Then some support 62 and then 60 afterwards. And this one for VIX, VIX nothing much taking place for now. Just still very much sideways. Like 17 to 20 is a resistance. Then whenever it hits like around 14, there's tends to be some support for there. So I think still pretty sideways. Copper also nothing much taking place right now, just sideways 4.6 resistance, then support around like 4.45 around there. So just pretty much sideways. Okay, I'll move on to the Okay, I'll move on to the different sectors. So first sector I'll talk about is the Magnificent Seven. So I'll talk about the ETF that represents the sector first, which is this Round Hill Magnificent Seven ETF, MAGS. So in terms of the Mag 7, we're still seeing very strong kind of price action over here. I think it looks like a bit of an ascending triangle. Still finding support along this upward support line, and then resistance last week has a breakthrough at this $60.80 levels. I think that's very good. And probably we could see this uptrend continue with these higher lows and then a few retests of this resistance recently. So that's still very good for the Magnificent 7 overall. First I'll talk about is Meta. Okay, so for Meta, I think it's overall still good. Just looks like a bit of sideways consolidation right now. So overall, the previous resistance are around 740. It's still holding a support over here. We've seen it test 2 times recently, and then there's some resistance for now like 758, which is around the 20 MA level over here. Then above 758, I would think the next level of resistance around 775 this level. So for Meta, I think it looks kind of like a bit of a range bound consolidation first. Yeah, then if it can break above this 758, then we might see some further strength come in. Yeah, just for now, just some sideways consolidation over here. Yeah, in terms of the weekly, there's a bit of a pullback recently towards the 10 MA, but still finding support around there. So I think that's still good. Then if you can break above the 758, which is around this 5 MA level on the weekly, then we could see the momentum come back. And just for now, a bit just moving sideways. Next one I'll talk about is Apple. So I think Apple is still looking pretty good. Since the breakout around 220s, price a retest 225, which found support. This previous resistance finding support at 225, and then there was a gap up on Wednesday above this recent horizontal resistance 233. It's still very good, and price is holding above the short-term moving averages. So that's overall still, I think, still moving on track since the breakout over here. I think most probably we will see price go higher to test the next resistance, which is this horizontal level around 247. That's the next level, and then afterwards will probably be around 259. This swing high point in December last year. Yeah, so I think Apple still very strong. Still very strong for now with the recent higher highs to form. The next one is on Amazon. So for Amazon, I think it has recovered well since the earnings came down. Yeah, price is just been, it looks like a bit of a sideways consolidation. So just moving sideways with support around 220 and resistance close to 235. So just moving a bit sideways. I think if you can continue to see higher lows being formed around here, which we have been seeing with the swing lows getting higher, then hopefully I think for now support will be around if it does backtest the moving averages, I think support maybe around 228, around this area over here. Yeah, then if here can hold and support a higher low, then I think there's a good chance of it trying to test the resistance again 235 and move upwards. Yeah, so overall still a bit sideways for now, but it's still looking good, I think. If it breaks above 235, the next level of resistance I think will be the highs around 242 as the next resistance level. So Amazon a bit sideways, but overall still holding pretty well. Okay, and the next one is on Netflix. Yeah, for Netflix, I think moving sideways as well with some resistance at this area, previous a bit of a sideways consolidation around here, as well as previous swing high resistance 1,260. Then price is still finding a bit of a resistance over here, but I think good thing is that it's holding this support around 1,200. So also just moving a bit sideways for now. Then on the weekly, it's around the holding the moving averages like close to around 1,200. So probably think this will hold as support and a bit of a sideways price action first. If price can break above this 1,270 about there, then we could see price slowly go up to retest the highs around 1,340. So a bit range bound for now first, but I think still looking good for now as support is still holding. Yeah. And then next one is Alphabet. Alphabet last week very nice. Was initially trading in this uptrend channel, just daily uptrend, and then we had a gap up after the news. And I think for now, most probably will continue the momentum. I think looking for support, I think the 5 ME level around 224 should be able to hold as a dynamic support level if the price does a retest over here. Then for now, I would think in terms of horizontal level, the breakout of 230 over here should be able to hold as a bit of a support over here. Yeah, breakout of the first day highs over here. So I think, yeah, still looking very strong for now, Alphabet. Then last but not least, Microsoft. Yeah, so Microsoft, I think it's a bit of an outlier in terms of the text. In this one, I think we're still seeing weakness as price. In terms of Friday, there was a break. Is trying to looks like we might break down this 498 level, which is a bit of sideways consolidation recently. And then is trading below the moving averages, like at 500, 505 to 510. You can see price is below the 510.20 MAs. So that's not very good. And in terms of the weekly, it's below the 5 and 10 MAs as well. So I think we might see some further pullback towards next level of support. Maybe you could retest the 20 MA of weekly, this $481 about there. So in the day, coming back to the day itself, 480 is also a level. So this level over here, previous some slight consolidation before price move higher. So I think if there's a pullback to 480, I think price would maybe see some temporary bounce over there. But for Microsoft, I think we can see it's one of the weakest among the tech names right now. Yeah. So in general, I think big tech still looking good. Most of them are either a bit of sideways or still very strong. For Microsoft, I think it's a bit weak as compared to the rest. Yeah, so that's generally for the big tech. Okay, I'll move on to the financial names. So first one, I'll start with the XLF, this Spider Financial Fund. So I think for this, it's probably trading within I think it's a rising wedge formation. So I feel that this trend line resistance has been respecting quite a bit over here, and then this will be the trend line support. So I think generally it's trading within this wedge itself. Yeah, finding a bit of a resistance at 54 recently. Let's see whether you can hold this $53 as support, which was this horizontal resistance prior to that. Yeah. Yeah, this is also this is also a support level on the weekly MA. So you can see 510 MA over here. Price has been finding support along these lines. So I think 53 might be a temporary support over here for price to do a bit of a bounce. Maybe just sideways consolidation. Yeah. Okay, next one I'll move on to the big four banks. First one is JP Morgan. For JPM, I think generally still just very sideways over here. Retest of 300 is facing resistance, and then price. A good thing is that price is holding 295, which is this breakout of this horizontal resistance level. So I think we might see some sideways price action for now still. Yeah, as long as price holds 295, I think we probably still looking quite strong. Yeah. On the weekly itself, I think this the 510 MA levels are quite important to hold as well. Currently 293, 294 around there. Which price has been trending along and holding as support since the recovery from April. So I think this is also an important level to note. So looks like a bit sideways for now first. Next one, Bank of America. I think this one still is, okay, still looking okay. Looks like a bit of sideways as well. Good thing is that price is still maintaining above the breakout of 48.70 over here. And just moving a bit sideways. So I think it's still pretty strong as long as can hold the breakout. And yeah, on the weekly, it's still above 510 MAs as well. So we might see some sideways consolidation, but if price can break above this recent resistance at $50.60, then you could see price continue to go higher. Next one, Wells Fargo. Wells Fargo a bit weaker compared to the rest. So after the Gen price has found resistance like around the $83 around this area, and if it cannot hold this $80 level over here, we might see some further pullback to test like $77 over here. So generally, I think it's a big range from 77 to 83 around here. So not as strong as if price can hold this $80. Then on the weekly MAs itself, if it does break below this $80, then we might see test the 20 MA weekly close to 77, which is also the horizontal level. So this one looks quite sideways as well. And let me look at the last one, Citigroup. Citigroup, okay, I think it's still looking okay. Just looks like an ascending triangle over here. Still higher lows being formed and multiple tests of resistance. I think it's pretty good. As long as can hold this trend line support, I think it's like 93 around there should be still pretty strong. Then let's see whether it can try to break above 97 to have higher to continue the uptrend. So I think for banks, generally quite sideways now for most of them. That's about it for the financials. I'll move on to the semicon names. For semicon names, I think first one I will talk about the Philadelphia Semicon Index, the SOX. So for the semicon index, still pretty range bound. There's no breakouts or breakdowns. Generally still holding support at 5,430, and then resistance is like 5,800 to 5,900, which has still been holding. So nothing much to comment, just still sideways. And looking in terms of the weekly chart itself, last week, even though we opened low, below the 510 MAs, we still managed to see a closing above that. So I think it's still holding the support. And as long as we don't see a breakdown below 5,500, I think should be still okay for now. Just still a bit sideways in general. Okay, next one, I'll move on to the individual counter. So first one I'll talk about is NVIDIA. So for NVIDIA, I think there's some, we can see price is a bit weakening in terms of the price action. Originally, it has been trading in a range between 171 to 183. But start of last week, we can see price retested the support area, this 170, then doing some bounce, but hasn't been a large rebound like previously past two times. So price is just moving, holding with some recent 172 about there. Then Friday there's a bit of a gap down with increased volume as well. So I think for now here, on Friday also we retested this swing low which is like 164.50. I think here should be able to hold for now. What I think price might do is to actually do a bit of retest of the 5 MA. Then you might find some resistance over there. Which is like close to 171, which is this previous support area, which might find some support. So I think if it does retest some of the short-term MAs like 5 and 10 on the daily, we might see some resistance coming. Since it looks like a bit of a breakdown on the daily, sorry. Let me see. On the weekly, we can see some weakness also. Price close below the 5 and 10 MAs. So they've been pulling back on the weekly for like few weeks. So some weakness for now. Yeah, in terms of the next support level, I think will be to watch will be 158, this level, and then 153. 153, if it reach, will be I think quite a strong support. This was like the previous double top resistance lah. So that will be a very strong support. So 150 and then 153, price goes a bit lower. I think we could have some quick bounce from those levels. Yeah, then for now 172, probably some resistance. Next one, AMD also seeing some weakness recently. So AMD weakness was because this price below this uptrend support line, which have been holding during the rally since April. And then second thing, in terms of horizontal levels, similar to NVIDIA lah. Previously, the horizontal support like 150, we've seen some good bounces over here, but recently the bounce is quite small. And then facing resistance from the 5 and 10 daily MAs, like last week bound to 164, 165 around there, then price had a gap down on Friday. So most probably we see 159 onwards here will probably be a bit of resistance in the short term, horizontal as well as the short term MAs. Then in terms of the supports downwards, I think we could see some support if it does retest this 147 level, which was this a bit of a sideways horizontal level over here previously. The 147, then next one is around 140. There's also a support over here. Yeah, so I think that's the short-term levels for AMD. Next one, TSM. TSM, I think still okay, just range bound. Yeah, just pretty much range bound for now still. So we just kept in the range at 230 and then resistance still at 247. So I think still nothing much, just probably just move sideways. And next one, ASML. Okay, ASML, I think ASML last week was pretty strong. I think close above the 5, 10, 20 MAs of the weekly, also the daily itself for gap up. So I think also with that also managed to break out of this resistance at like 758 over here and then this area over here. So I think we could see some continued momentum upwards for ASML in the short term to maybe test to actually retest back this horizontal resistance area like 810, 820 this area again. Yeah. As long as they hold 758 this level, I think there's a chance to actually go higher with the current momentum. Okay, then for Marvell, Marvell after earnings gap down, nothing much, just sideways and broke below this 68, 68, 69 probably. If it does have a retest, this will be resistance, I think, in the short term. And then support for now will be, I think, this area, maybe 50. If it does dip towards like 58, 59, I think there might be some bounce. Because previously this was a resistance during the consolidation, and then when price broke out, it did 2 times retest over here. So I think this might hold as some short-term support. So I think overall, Marvell after the gap down, probably sideways, I think 50, 59 support. Then if it does reach like 67, 69, this will be most probably resistance. Next one, Micron. I think Micron still trending pretty well. So another test of the resistance area again, 128, 129. Higher lows form along the way. And then the good thing is that this level 122, which was this some support, price breakdown, then came back up. It managed to break above this level again, 122 on Thursday, and then closed at 128, 129, the resistance. So I think that's still very good. I think we will most probably see some momentum upwards for Micron to continue to head towards the next resistance, which is next level 136 over here. And then next one will be maybe 143. Yeah. And then 156 based on the previous horizontal levels. So I think still looking quite good for Micron right now. I'll talk about two more, Broadcom as well as Intel. So for Broadcom, yeah, after earnings cap up, then generally just a bit of I think maybe from profit taking. But I think overall it doesn't change that it's a strong uptrend overall. Then I think if there's some dips towards the support, I think there could be some rebound. Yeah, so I think for now some supports to watch. If horizontal level wise, if it does retest 317 this previous resistance, and then if price catch up to if the price retest the 5 MA in the very short term, I think we could see some bounce from there as well. So most probably, I think price might just do a bit of a dip or sideways until wait for some of these and moving averages to catch up. Then we might find some support again for the price. So I think this one just wait first. This one Intel, nothing much. Intel just sideways. Yeah. Good thing is that if as long as price can hold like 2350, then I think it's still pretty okay, which was this prior horizontal resistance. Now acting as a bit of a support over here. Then on the daily, also still okay, just retesting the 5 MA and the weekly. So if this holds, I think it might be still quite good for price to try to do some rebound towards the resistance like close to 26. So that's it for the semi-cons. I think generally index-wise it's still quite sideways. In terms of individual names, I think we're seeing in terms of the bigger names like NVIDIA, AMD, we're seeing some weakness. Then some of the other names like ASML, Micro, I think we are seeing some strength coming. So maybe some rotation taking place among the individual names for now. Then last sector I'll talk about is EVs. So for first one, I'll start with Tesla. I think Tesla, still holding the breakout well. So since the breakout of this wedge, and price has been, I think, trending within this uptrend channel over here. So for now, Friday, we tested the swing high 355, then some upper week over here. Today, there's a market up again. So I think over here, it might be close to the resistance if based on the horizontal level as well as the horizontal level previously, like 355 to 357, we have this swing high previously. So over here might have some resistance. Because on the channel itself, like 359, 360, there might be some resistance over here. So I think over here is quite high. Might be have some resistance for the short term. Then if there's some pullback, I think price maybe just it could do a bit of a sideways or a pullback, from this area. Then in terms of supports, I think short-term support maybe around like if it does retest like around 340, this area where the moving averages are, there might be some support over here. So maybe similar to this, but if there's a dip towards the moving averages, then price it might be a low area again for price to do a rebound. So yeah, I think price overall Tesla is just moving up and down within this channel itself. Okay, then I'll talk about some other EVs. Xpeng. Yeah, Xpeng after the strong moves upwards, see some profit taking back down. So for now, momentum is down below the 5M, below the moving averages. And I think if it does dip towards like $19 around there will probably be some support based on previous swing low levels. And then for now, resistance maybe around $21 about there. Yeah, for NEO, I think momentum coming off a little bit as well. Yeah, we're seeing some pullback. I think we might see price retest the 5M in the weekly itself, 5.6 around there. Yeah, that's a 20 MA on the daily itself as well. In terms of horizontal levels, like 5.3, around 5.3 is also a horizontal previous resistance that might get support. The price pullbacks towards these areas. And then last one, Rivian. Yeah, for Rivian, I think interesting chart. Okay, looks like a bit of a double bottom. So over here, like around $12, double bottom. Neckline resistance like $14.50 around here. So I think if price can break over this resistance again, then we might be able to see some upside for Rivian, I think, for now. Yeah, to test resistance area like around 1570 and then like this 1660 area. Yeah, so I think maybe something to look out for if you're interested. Yeah, so that's it for the individual counters. I'll move on to the Q&A. Okay. Let me see. I see some questions. Okay, I see the question. September is supposed to be bearish historically. What's the probability for this September as interest rate cut is also in the same month? Okay, I think yes, you're correct. If we look at historical, September is is a bit weaker lah. Historically, I think in terms of the stats, this morning I took a look. It's September on a post-election year, September averages like minus 1.35% lah for the S&P 500 with a 43% chance of the month ending up green. So definitely some weakness. But in terms of the price action, I think still okay lah. If I look at how I went through the indices earlier on, still an uptrend. Then I think generally price is respecting the 30 MA level, which I have observed. So this, if the 30 MA level prices find some good support along the way. So I think as long as this holds like 6,400, should be still okay. And then weekly wise, 6,370, which is a 10 MA weekly. As long as this holds, I'll still remain bullish. Yeah. So unless these two levels are being broken, then I will be more cautious this month. Yeah. And in terms of if rate cut is coming, I think historically we look at it, if the rate cut is done not in the case of recession, the market tends to rise. Also, for example, like last year, we seen the rate cut start. I think it was September as well. Then generally market reacted quite well to it as well. So I think I probably wouldn't worry too much for now. Yeah, unless the price unless the price action breaks some of these key levels, then I'll be more cautious. But I'm not expecting, even if that happens, I'm not expecting like a big crash to come. Maybe just a normal maybe like 3 to 5% pullback around there. Yeah, so let's see how it goes. And there's another question. Hi Zin, why is Bitcoin Ethereum having a pullback recently while gold and quite a few SGX stocks are hitting all-time highs? I think I'm not too sure about that as well, but in terms of the crypto, I think previously because they have rallied quite a lot, especially for Ethereum. So I think probably some profit taking, and Bitcoin also, I think also found a double top, and we're seeing some pullback. I think which is quite okay. Overall, it's still an uptrend, and that's normal. I think just normal pullback. And yeah, if you're interested, I think if it actually hits some of the long-term moving averages, that might present a good buying opportunity as well. If there's a big enough pullback. Yeah. Let me see what's the other part of your question. Gold is hitting all time. Yes, gold. Yeah. So after a long consolidation, which I think we've been if you join this webinar, we're talking about it for quite some time. The gold was just sideways and finally we breakout. And previously it was an uptrend. So yeah, so I think that's a continuation of uptrend. So pretty good. And STI stocks, yeah, STI generally, STI has been very strong. A lot of all the names have been just rallying. So I think maybe because of funds coming in, and also the chart. STI chart is also pretty good. If you look at it. Index. Yeah, STI chart still pretty good. The July strong rally, then we had this ascending triangle consolidation and recently breakout again. So very healthy consolidation and breakout to continue the uptrend. Yeah, so I think maybe just some rotation around the different sectors. I think if Bitcoin Ethereum dips enough, I think the funds will come back to buy in as well. Yeah, just I think it's quite normal. Okay, I think there's another question. Nvidia since a downtrend, will it be better to sell and buy back later? Okay, I wouldn't think it's on a down. I don't think it's in the downtrend right now. If you look at the big picture, there has been quite few violent pullbacks along the way. But overall, it's still in the uptrend. In terms of if you're looking at it from a very time sensitive daily time frame wise, a very short term view, then I think it could be in weakness that call it a bit of a weakness since it broke below this 171 level. Will it be better to sell and buy back later? I think you can do that. Yeah, I think, but you must kind of pray that the price hits some of these support levels and then rebounds back. So I think there's some luck involved as well. I think if you're looking in terms of trading, I think for now can look to sell and buy back at lower prices. But in terms of investment, I think probably you can just hold on for now. Maybe just some normal pullback for now. Yeah, that's what I feel. Okay, I'll move to some of the questions. First one, MSI. Okay, for MSI, is Motorola Solutions. So I think overall price since breakout of 438 move upwards and consolidation sideways breakout of 470. So overall still trending well, and then some resistance in the short term to look at will be this 480 on there. Yeah, 480 around there might be some resistance. So I think at this level, price maybe might do some sideways again, but I will expect this uptrend to hold on like 468 to like 472 area. This should be able to hold as a support again around the 10 MA as well, the horizontal level breakout levels. Then above 480, the next resistance level to look at is close to 498 to 500 around there. So still a good uptrend taking place for Motorola. And next one, VBK. I think VBK also still holding well. This is a small cap growth ETF. Yeah, just breakout of 289 holding as support, and then yeah, testing this area of range resistance previously 296. So we might be a bit of a pullback over here, then rebounded back up. So I think we might see price try to go back up further to try and test the next level of resistance, 302, 303 over here. Yeah, since I think small caps also benefiting from the rate cut narrative. Yeah. And next one, ETHA, the Ethereum ETF, iShares Ethereum Trust ETF. Yeah, this one I think still holds actually quite resilient now. You can see it just sideways. Yeah, I think it was just pretty sideways like 31 to 36. So I think over here the 20 ME level daily might hold as a bit of support along with this swing low. And then if you look at it on the weekly, yeah, on the weekly itself, maybe if it come the 10 MA level, if it dips until there is also probably a good support level as well. So I think for now, maybe just some sideways consolidation now in general. Okay, next high, BY Congress, new holdings, VSCO and ST. For new holdings, I think I'm still pretty positive about it. So since the price broke above $14, still maintaining above the breakout. And then price, still holding the short-term moving averages support like 1450 around here, some sideways. Then yeah, so I think it's still pretty good as long as price holds above $14 is breakout. If price can break 15, then most likely we'll see rally continue to retest its previous double top, like around $16. And next one, VSCO, which is Victoria's Secret. For Victoria's Secret, I think okay, the chart is pretty good as well. So after the earning, I think this was earnings a gap up, then pull back towards resistance, like around 2270 about there. And we've seen a rebound back. So I think I like this chart. This was quite a strong resistance previously. Tested multiple times, and then the next thing, and then also is also after earnings back tested and then found support and move higher. So I would think price will probably be I think hit higher from here. Yeah, there's some possible resistance at around $28 based on previous levels around there. But I think if that's cleared, I think we might see next one is like 29, around $30 and then 32 about there. So I think Victoria's Secret, I think this chart is pretty good. After a long range consolidation over here, I think there's a breakout we're seeing right now. Yeah. The next one is C Limited. Yeah, for C Limited, I think is still holding well after the earnings gap up, clear resistance 170, generally a bit sideways over here. But still price is still generally heading higher. So I think most probably will extend the uptrend to go towards the next level of resistance, like around this 200 this layer area, like 200 to 206 here. Then afterwards, the next level of resistance will probably be around 230. So that's for C Limited. Next one, there's a question on iBit. iBit, iShares Bitcoin Trust ETF. For this, I think some weakness for now. As you can see, this was previous resistance like 63.90. Price did a range over here, then double top 69, around 69.50 about there. Then we see some breakdowns recently. So I think some weakness for now for iBit. Yeah, we might see some sideways movement or a bit of a further pullback. The next level of support, I think, will be around maybe close to 60 and then like 57, 60 around there. Yeah. Okay, hi, Busion, your counters are ELF, SMCI, and Palantir. Okay, for LFUT, I think it generally is a range consolidation, but some good price action. Previously, because 109 over here, right, there was a earnings step down, but afterwards it looks like a bear trap and its price recovered back up quite quickly, and then has held above that all the way. So then recently we also seen another bullish development is that price took above 123 this resistance, and then back test on support, move higher, and then also clear this 130, 131 resistance area. So I think overall still looking pretty good. Yeah, then next level of resistance, I think will be to test this 143 to 147, this area. And next one is like 152 around there. So I think for LQT, I think the chart is still looking pretty good with the recent bullish price action. Next, SMCI, I think it's a bit still showing weakness since the earnings gap down. We've seen price just slowly trend lower along the 5 and 10 day MAs. For now, 39 might be an area of maybe some support, because this was like a range resistance, like 37 to 39, then turn to support price, then afterwards price went higher previously. So back at, if we go back to 39, there might be some support over here. And then second thing is that there's this upward support line also. Yeah, so I think there might be some support over there. Then in terms of resistance, maybe 42 to 43 will be quite strong resistance for now. Like the 5 MA and 20 MA of the weekly sell. Yeah, so for SMCI, maybe some bounce might take place from there, but I think overall we're still quite weak with the kind of price action, just a range, and then we see a breakdown, and then a range, a breakdown again. So for maybe just a small bounce from supports. Then next one, Palantir, I think still a bit weak. So Palantir, we've seen that price looks like is below this uptrend channel over here for this support. Then for now it's just sideways, and now we're seeing some lower highs around here with supports around 150 those are the lower week levels. So generally sideways, and then daily time frame wise, you're seeing price finding resistance 5 and 10 MA levels over here. So I think for now maybe it's just sideways. I think more towards downside bias. If 150 breaks again, we might see a retest of this lower wick around 142. Yeah, then maybe some lower highs afterwards. Yeah, below 140, 142, 145, this area of support. The next level of support maybe about 133, 130 to 133 around here. Yeah. So I think for Palantir, still not much strength, just generally moving sideways after this sell down. Okay, next one is on TLT, which is a 20 plus year treasury bond ETFs. So for this, I think it has been sideways for quite some time. I think generally still in the range over here, but good thing is that there's been higher lows formed along the way. So I think we've seen higher swing lows formed along the way at the consistent resistance around 88 to 89. So I think price will try to break out this range to try to hit 90 to 90 as well as 92 as the next resistance over time now. Because if you look at the inverse, which is the 20-year government bond yield, because TLT is the inverse of this, we can see that the 20-year plus bond yield is showing weakness where it's a descending triangle, lower highs, and then price breakdown of 4.74% support level. So I think if bond yields come down to test next support like 4.62, if bond yields come down, I think we'll probably see TLT move upwards in the inverse. So I think we'll probably see price breakout of TLT to test the next resistance upwards. The next one, Lockheed Martin. Okay, for Lockheed Martin, I think it's slowly trending upwards for now. Because price, just moving sideways, range and then breakout like over here for 433, and then over here retesting the prior resistance over here sideways a while, breakout 443, and then over here again last week. Close out this gap at 456 and then breakout again. Yeah, so I think we might see this recent trend continue where it just slowly trend higher. Yeah, maybe along this upward support line perhaps. Yeah, so I think we might see price go to test 470 over here, then pull back sideways again. Yeah, something like that. Okay, Next one, Chipotle. Yeah, after earnings step down has been just moving downwards. Over here right now, close to the support as well as swing low like 41. So I think we might have some small bounce over here. Previously, I think this was like a support level below 41. Next support level like 39, maybe down 39.40 lah, based on previous levels. But for now, I think there might be some small bounce from this retest over here, but I think we'll find resistance from the 5 MA, maybe like 41.60 perhaps. Overall, it's still pretty weak. Yeah, I would expect some small bounce, then retest of the moving averages, maybe 5 MA or 10 MA, maybe find resistance again, then be more sideways or continue to make lower lows. Yeah. Next one, Essential. I think price moving a bit sideways for now. So just moving to around 250 to 260 area. For now, then maybe some resist on the weekly wise, some resistance maybe from a retest of the 10 MA weekly. So around 266 for now, yeah. Which we've seen over here previously. Since price is still on a downtrend, yeah. Okay, next one is Surf Robotics. Okay, so Surf Robotics, I think this one is like tried to break out of this downwards channel over here, but couldn't hold at 1060. And then in terms of the horizontal levels, I think there's still generally quite a strong resistance at $12 around here. Then price just pulled back. Over here we might see just some sideways again, where over here like around like 880. Over here this swing low might hold as a temporary support. Maybe some sideways over here first. Yeah. Then resistance could be like this. For now, maybe resistance like 1070 onwards. Yeah. The next one on United Health. I think United Health, after the gap out, I think price action is pretty good. It's been holding the short-term 5 and 10-day moving averages over here. And then on the last Friday, also break out of 310 this horizontal level over here. So I think really good. I think we'll hit higher after this consolidation to test on the resistance ahead, like this previous swing high area, like 322 to 326. That's like the short-term next resistance. And afterwards will be like 340 around. This was how much? This 339. Yeah. So I think most probably will hit. I think we'll go higher after this consolidation as price is well supported. Okay, next one, Novo Nordisk. Okay, I think price after rebound, facing some resistance from a retest of prior support around 57. Yeah, on the weekly itself, I think overall could find some resistance like 59, the 10 MA level. Yeah, and temporary support 54 on the 5 MA weekly. And overall, maybe we see some sideways price action for now first. Okay, the next one is CVS. Okay, for CVS, I think it's trending pretty well. So price tested this gap up resistance 71.70. There was a bit of sideways, and then afterwards breakout of that to continue trending higher. So I think most probably we see price continue the rally towards the next level of resistance, which is around this 75.60 previously, and then this 77.20 for CVS. Next up is Pfizer. Okay, for Pfizer, I think there's some pullback from the horizontal resistance around $26, and yeah, just moving a bit sideways over here. And the weekly, yeah, just retesting the 5 to 10 MA level, 24.70 to 25. So maybe we might see price hold over here for below that next support like 23.90, 20 MA weekly. Yeah, so I think most probably some sideways consolidation with the resistance will be the recent resistance like 25 over here. Next one, Lululemon. Yeah, after earnings get down again. Yeah, so I really need to go back all the way back to see what's the price levels. Yeah, so I think in terms of next level, the support maybe around 162, 163 based on previous levels, and then afterwards maybe 153, maybe around there. Yeah, so definitely still very big for Lululemon, and yeah, we could see maybe price sideways or trend a bit lower. Yeah, based on previous like earnings gap down we've seen over here, price trended over and over here as well. So yeah, let's see whether most probably we'll try to go back to some of the previous supports. Next one, Salesforce. Okay, Salesforce, I think after earnings stepped down, but some bounce, I think still maintaining like this 233 level. For now, I think maybe some range consolidation with resistance probably still holding at 257 for now. Yeah, then maybe just price will maybe just do some sideways over here. Yeah, on the weekly, it's still there's price is still below the 10 MA as well. There might be some reason to 55. Yeah, so I will expect some range bound first. Next one on Eli Lilly. For Eli Lilly, I think it's maybe slowly inch upwards, but forming some slight range in between. So over here, tested the previous support, holding some resistance at 715 sideways, move up again, and then break out, move sideways again. So feel the gap over here 745 around there. Next one, 760, probably some resistance as well. So I think quite a lot of resistance along the way, and price is just moving slowly, going a bit higher and sideways at the same time. Yeah, so this one really, for this to continue, we must see this 720 hold as support, which is a breakout of this swing high. On the weekly, maybe some resistance can come in because it tested the 10 MA weekly, like 740 over here. Then we see some upper wicks on both weeks. So perhaps some pullback over here, maybe some sideways. Okay, next one, Moderna. Yeah, Moderna for now, I think should be quite weak because it's back down to test this 23 level again and breakdown of this 2570. So maybe I think we might see some sideways over here, where here might the recent breakdown below 26 will hold as a bit of resistance. Yeah, on the weekly itself, 5 MA might be the 26 also, maybe some resistance as price base is like trending along this as resistance for now. The next one is on Adobe. So Adobe, I think generally still downtrend, then lower highs, and then test of the key support again at 333. So some rebound over here. Short-term wise, is with some resistance from the MAs around this 350 plus area, and also this horizontal breakdown area. Above that 362 was also resistance. So I think most probably we might see some sideways or pullback from this area again. There's also, I think, earnings coming up this on the weekly, also 359 10 MA weekly might be some resistance as well. The next one is on Teladoc. Yeah, Teladoc, some bounce back to this breakdown area, like $8 previously. I think here might probably hold with some resistance for price. Maybe just, I think price might do some sideways over here first, between like 7.5 to like $8 one pound. And GameStop also earnings coming out this week. Generally, nothing much. Since the previous earnings gap down, price has just moved sideways for 3 months. Between like 2022 to 24. So I'm not expecting much. Yeah, for now, just probably sideways until then we see how it moves after the next earnings. Next one, Hive Digital. Yeah, for this, I think, okay, this one slowly going up. Yeah, and this thing is, yeah, tested this area of swing high previously, $3. Some pullback over here. Okay, I think if it dips to like 250, then here should be able to find some support from this resistance for a bounce. Yeah, I think that's for now. Next one, Canon Inc. Canon just range bound, I guess. Previous is support like around 81 cents to 85 cent area holding as resistance for now. So we're seeing resistance around the 80 cents over here for now. Then support for now is around like 66 cents. So I think nothing much. I'll just do like range bound taking place for now. Next one, bit mining, BTCM. Yeah, this one just fading off since the high volume day over here. So we might see some support back in again. Around close to this swing low, which are 230 to 250 area. I think we might see, maybe it could do a retest and some small bounce. But generally, I think might find resistance along the short-term MAs. Next one, BT. BTPT showing some weakness, I guess. The breakdown is 270. Yeah. And next support level maybe around this 230, 235 around there. And maybe around next one 215. Okay, next question, Fortinet. Okay, Fortinet after the earnings gap, I think it has been just pretty much sideways for now. So I think for now, in terms of horizontal levels, previously, I think maybe 83, 84 there, based on previous level, might be a resistance. This was like a previous support as well. The weekly, currently doing a retest of the 5 MA 78. So to see whether you can try to hold above it to try to go higher. Yeah, for now I think most probably still quite range bound. Yeah, it's been pretty sideways with some recent 81. First 81 and after next maybe 83 could be some resistance as well. Then I will expect recent supports to hold like 76 over here. So I think all in all, I would think quite sideways. Yeah. Next one, Enphase. Okay, Enphase I think looking a bit better because overall downtrend counter, but trying to come out of this downtrend channel, and recently it's like a potential bearish trap over here where price recover back above 34.30. Then doing some sideways recently, testing the support breakdown over here like 30, around 30. This is 39. So maybe some resistance over here could still hold with some sideways, but let's see if price can maintain the recent lows at 36, then there could be a chance for price to try to rebound further up. Then next level of resistance to look at would be like this 43. Yeah, so maybe this is like some rebound overall. In terms of the weekly wise, also looking better. So previously price was finding resistance along the 5 and 10 weekly. Then we see recently trying to get out above. If price can hold like this 36, 37 weekly 5, 10 MAs, then there might be a chance for a further bounce ahead for Enphase. So let's see how it goes. Yeah, it's about 9:50. I'll take 2 more questions. Yeah, so next one is Hims and Hers. So Hims and Hers tested this support like 41 recently. Then we seeing some rebound. I will expect resistance like this 52, this over here, this horizontal level. Then in terms of the weekly, I think for 50 might be some resistance or 50 to 52. This 10 MA on the weekly. Yep. Then I'll think over here might be resistance, then maybe go do a pullback and just sideways over here. Yeah, maybe something similar to this part. There was a down, then a rebound, then sideways again. Okay, next one, Lum Research. Lum Research. Let's see how is it on the weekly, still quite good. Holding 510 MA as supports. Previously, it was holding around here. Last week kept down, but close above that, still looking okay. So I would think for now the support around this 96 is still holding, and could see price go back up to test the recent resistance like this 105 and 108. Yeah, above that is 111. Yeah, so I think for now a bit still looks a bit range kind of movement, but still supported from the daily like 96 around there, and the weekly also looking okay. So I think either range amount, still further range, or could try to move higher afterwards. Yeah. Okay. Okay, sorry, I'm unable to take all the questions if you have time. Let me see. I do see some qualitative questions. Let me just try to see. Oscar Health very volatile. Any chance to go back in again? I think there could be a chance for this counter. Also notice it's quite volatile, the up down movement. So I think this one counter try to buy deep. I think there could be a chance. Yeah, so over here like go up, then came back down, then go up, then it did a range over here. Even though breakout, then there could still be a chance where there's a pullback. I think if that comes, then there could be a chance. Yeah, since it's also like quite low value, like 10 plus dollar kind of stock. I think there could be a chance if there's a pullback. Do you know what does sponsor ADR mean on the name? For example, ASML is ASML Holding NV sponsor ADR. I'm not sure on that. Yeah, sorry, I can't give you a very good answer on that. Apologies. Are crypto sensitive to Fed rate cuts? Do they react positively or negatively? I think in general, like the risk assets are quite sensitive. So I think if the rate cuts come, I think that could generally benefit cryptos as well. Yeah. Okay, then no US webinar for next 2 weeks. Yeah, there's no webinar. Because I'll be away. But I'll be when I'll be back. When I'm back, the webinars will resume. So apologies for that. Okay, so yeah, there's still quite a lot of questions in the Q&A. Sorry, I'm going to take all of them. But I appreciate for all of you attending and also asking so many questions. Yeah. So I'll end the session over here. Let me just share the link that some links. Just give me a moment. Okay. Okay, so I've dropped the link for the survey form, so you can leave any feedback about today's session. If you think it's good, you can I will appreciate if you can leave me a feedback as well. Also, if you're new, welcome. If you haven't, if you have always been here, also if you haven't joined the Poem 3 community of any kind, you can feel free to download using this link. Then it's a place where you can actually I'll post about TA lah. Then you can leave any questions there if you have any, or just engage in a discussion with other people as well. So it's just a TA community. And then if you're new or you haven't joined, we have also the Poems TA. I've dropped the Telegram handle in the chat as well. So you can join the Telegram group as well. Same thing lah. You can ask TA questions, or I'll post TA content over there. So that's about it for today's session. Thanks a lot for all attending and also all your questions. Hope you all have a good week ahead in the market as well. And then just look out for some of the key, as usual, the key stuff like your earnings, if your counters have earnings, and also some of the major economic calendar events, like tomorrow there's the non-farm payroll revision. I think there'll be quite in focus, like everything about jobs is in focus right now. And then also the CPI Thursday this week. So that's it for today's session. Hope all of you have we had a good interaction, as well as sharing of TA counters. We can all take reference on each other and see what kind of possible setups and things to look, maybe to put in our watch list. Okay, so that's all for today. Hope you all have a good week ahead and good trading, and hope to see you again next webinar. Good night and bye bye.